Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name is Abhilash and welcome to Cut to the Chase. Overnight, equity markets rebounded as S&P 500 and Nasdaq rose nearly 2.5%, and this comes after the broad-based declines we have seen over the past 2 weeks. Now, as we've highlighted earlier, during equity bear markets such as the one we are in now, it is quite normal to see bear market rallies of greater than 10% before the market eventually finds bottom. So we would not try to read too much into the move, as the main headwind for equity markets, that is the recession risk, still remains largely unchanged. Since this is a light week from economic data release perspective, all eyes will be on various central banks as they are clearly in the driver's seat. Now, yesterday, Australian Central Bank Governor Lowe signaled that he was considering raising rates by 25 to 50 basis points in the meeting on 5th July rather than 75 basis points that had been priced in by the markets. He also reiterated that higher rates were needed to keep inflation in check, and strong consumer spending and the solid labor market allowed for the rates to be raised higher. As a result, market expectations of RBA rate hikes declined yesterday, and that's likely to exert a downward pressure on the Australian dollar over the next 1 to 2 weeks. So in the near term, we see 0.6825 as the key support for the Aussie dollar. Now, jumping from Australia to US, this is a fairly busy week for Fed watchers, as a number of Fed speakers are scheduled to speak this week. Now, overnight, Cleveland Fed President Mester and Richmond Fed President Barkin spoke. Barkin downplayed the recession risk and characterized the US economy as relatively healthy. He also said that the Fed should raise rates as fast as it can without causing undue harm to financial markets or the economy. Tonight, Fed Chair Powell is scheduled to deliver his semi-annual testimony before the Senate panel. Now, historically, it's rare for the Fed Chair to deliver a new message in such testimonies, but given the intense focus on inflation and recession risks, markets are going to be paying a close attention to the testimony to try and glean further clues around the Fed thought process. Over the next few days, we will have Fed Presidents Evans, Barkin, Harker, Bullard, and Daly speak at various events. So, all the investors need to pull out their Fed watcher hats and put them on, because central banks are clearly in the driver's seat this week. That's all from me for today. As always, if you enjoyed this podcast, please don't forget to rate and like it. Thank you for listening, and we wish you a very happy trading day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.